Hello and welcome to Homescreen. I'm Joe Colchester, Product Manager here at 11FS Pulse. Pulse is our collection of over 4,000 user journeys from banks and fintechs from all over the world. So head over to pulse.11fs.com to request a free demo to see how others are solving their UX challenges. In today's episode, we're joined by Simon Taylor, 11FS's Head of Ventures and our go-to crypto expert, to talk about how crypto is becoming more mainstream and the challenges it still faces. How are you doing today, Simon?
I'm really well, thank you, Joe. How are you?
I'm very well, thanks. Very excited to talk about crypto. It's our first crypto special, so we're honoured to have you on.
No, I'm glad to be here. It feels like crypto and fintech are like having this weird Barbie and Ken kissing moment at the moment. Like the bleed over has started to become really, really normal. So I'd love to unpack why we think that is, and what's going on behind the scenes and what that means for user experience.
Yeah, absolutely. And we're finally starting to see good UX journeys, good crypto experiences. So they're appearing in Pulse. So it's a perfect time to talk about it, really. And actually, on that, could you just start by telling us a little bit about the evolution of crypto apps?
Yeah, so crypto apps really come along in the first real bull run in 2013-14. There was lots of, if you go back to 2010, how did you download and manage Bitcoin and create a wallet? You had to go download the software yourself. You had to set up and configure that software. It looked like you were dealing with software engineering. It was incredibly complex, and the level of skill you needed just to be able to run a Bitcoin wallet back in 2010 and 11 was really quite significant compared to mobile apps on phones at the time, even from most big banks. I mean, it was just night and day. You could typically only do it on a laptop or a big heavy machine, so it wasn't really designed to have good user experience. And then along comes Brian Armstrong and Coinbase and many others like it, trying to build really good user experiences off the back of it, and you're really being mobile first as well as having the website. You saw then in 14, 15, 16, a lot of trading driven user experiences. So I think about Kraken, I think about Coinbase, I think about all of the things that then popped up like Binance. This is looking like you're dealing with a trading professional. You're looking at charts and screens and prices and buy orders, sell orders, limit orders. It just didn't feel like a fintech app. And to their credit, Coinbase continued to push the boundary and became the on-ramp throughout all of that. But in the last 3 or 4 years, we've really seen the emergence of BlockFi and Argent and even MetaMask and this whole new set of experiences that take that world of crypto and make it something that sits in my pocket and feels easier to use. So the experience has really improved from the crypto apps themselves. But the other thing that's happened is the Robinhoods, the Squares, the Revoluts have added crypto into their experience, PayPal and many, many others. So the people who happen to be really good at UX have also been building it. So we've seen this convergence thing start to happen that's really, really interesting.
Absolutely, yeah, and we're going to take a look at that one of those Coinbase journeys later, and it just shows how simple it is, and how similar it is to other digital wallets, other platforms that we've seen recently, whether it's prepaid cards or neobanks. They just seem so similar now and so easy to use. In terms of the kind of ideal end goal for the integration of crypto and finance, what do you see that being? What do you envision for that?
I guess the ideal end goal for who is kind of my first question, right? Because do you talking about the experience for a consumer every day who cares about crypto, a consumer who's just trying to go through life? I think there is a bit of a different perspective on both of those.
Yeah, so let's say the ideal experience for the user, the crypto user, but perhaps in a way that they can't foresee. So with your knowledge of crypto, just the benefits that they could have from crypto.
So one of the things that's emerged in the past month or two is companies like Donut and Eco and these wallets that are it almost doesn't look like crypto. It just looks like a place to store my money and move money. It looks like a wallet. I store US dollars in this thing, and oh wow, it gives me 5% APR. That's really good because if I was to go to a bank, I get 0.5% APR.
Right.
So suddenly this just looks like a really easy to use, better account. Now, we can't call it a bank account because what they're doing is a little bit different, but it just looks and feels super easy to use. And that, I think, as an experience, is just like, well, why wouldn't I use that if it's getting a better return? So I
Yeah.
think that's the first obvious use case. The second one then comes about like the ability to move money between my friends and move money between businesses at a much cheaper cost. So we're just starting to see the very early days of stablecoins. So this is if cryptocurrencies like Bitcoin and ETH are sort of very unstable, they're very volatile, then stablecoins are exactly what they sound like. They are pegged to the dollar or pegged to the pound, pegged to your local currency. So if I have a stablecoin, it should keep its value. And if I send you, Joe, $10 in stablecoins, you can take those stablecoins and go cash them out into a bank account somewhere and use them. But the difference is, unlike regular US dollars that sit in a bank account, I might have to pay some money, wait 3 days, 4 days to try and send that to the other side of the world. Whereas with stablecoins, anybody with software can move that near free, near instant. So I think we'll see lots of innovation that comes off the back of that. Those are two areas. First one is just better rates.
Mm-hmm.
And there's some controversy about how they're getting to those better rates, but it's another point. Second one is moving money around the world. And then I think the third one is people starting to think about bringing their portfolios and their crypto together with everything they do in their financial lives. Because I think something in the US, like 15% of consumers already have crypto. I don't know about you, but I've got 15 different apps on my phone that do some sort of finance. And a really good experience could start to maybe wrap some of that together.
Yeah, absolutely. Well, thank you for summarizing those points. That's great. In terms of the obstacles that institutions face when it comes to integrating crypto payments, what are some of the key ones there?
First one is just education. Can I do it? How do I do it?
Mm-hmm.
What is it? And quite a lot of the time, an institution will tend to view crypto either as, oh, it's scary, it's bad, the regulator's not going to like it. So there's an education thing about like, how do I make this safe? Mm-hmm. The second thing then is finding the way that you actually get the US dollars that you have now and turn them into crypto if somebody wants to buy, sell, hold them. And that sounds like an awful lot of work to do. And it turns out there's now a whole industry of people that do that on your behalf. So there are companies like Paxos, companies like NYDIG, companies like Genesis Trust, Fireblocks, Zero Hash, all of these companies. So Paxos works with PayPal. I'm not sure who works with Square. Like all of these companies will help you buy, sell, and hold and manage the cryptocurrency so that you as the wallet developer, you as the entrepreneur, don't have to worry about holding the crypto. You don't have to worry about buying it or selling it. You're just talking to an API endpoint. So as a designer, I can focus on building my experience without having to deal with the regulatory or the compliance overhead. As a bank, I can just focus on building my experience without having to deal with the compliance overhead and the regulatory, because it's not me, the bank, that's holding it. I'm just providing a service to my consumer. Now, in providing a service to my consumer, there's still a lot of things I've got to take care of. I've still got to make sure they know what they're buying. I've still got to take them through really good terms and conditions. I've still got to really help build that in a way that makes sure I'm treating them fairly, but I don't have to deal with all of that heavy lifting. So there are ways to do it.
Okay, great. And I guess that kind of feeds into the next question, which is what are the kind of largest UX challenges for crypto currently? They've obviously come a long way, and things are so much easier than they were. But what are the big kind of pain points at the moment?
So crypto is either like a walled garden inside of an app, or it's this world of just beautiful rainbows and colors that makes no sense, that just looks like it's in a completely other language. So the walled garden inside the app is great, but you're getting absolutely ripped on fees. Mm-hmm. So, and the only exception to that is Square Cash, who've actually figured out you can have Bitcoin only, but you can move money from Square Cash to somebody else who doesn't have Square Cash as Bitcoin. And they are the only one that's figured that out, but you can only have Bitcoin. So these wallets that are more walled garden like tend to have better experience, but the fees are higher, and also they're very limited in the cryptocurrencies they offer. Traditionally,
Okay.
that's starting to change. The alternative is a more crypto wallet, but the crypto wallet tends to be like dense language, and there's all of these coins. There's this middle ground of sort of Coinbase and BlockFi and others that are starting to build better experiences, but it still feels like you have to learn another language to know what the difference between a Dogecoin and a Bitcoin and an ETH and a Cardano and all of these things really are. But then if you're going to be buying these things, maybe you need to do that. Maybe there is a level of awareness. So it feels like there's no clean on ramp all the way from beginner to intermediate to expert. You either come in at intermediate and you've got more choices, but you're somewhat limited from the experts, or you come in at beginner and you're stuck there, and then you have to go get the intermediate wallet and kind of manage that. So that will probably get solved in time. But I really do think that the UX is either stuck and limited and I'm getting hit on fees, but it's beautiful,
Hmm.
or it's a bit more confusing. I've got a higher cognitive load to understand what's going on. The onboarding looks and feels great, but what do I do when I'm here? Am I borrowing? What's my DeFi yield mean? Like, there's just this whole other language thing that's sort of expected for people that are at that intermediate level.
Yeah, for sure. I'm just dipping my toes into the sort of slightly more complicated platforms. It's really hard to get started. Just talking about those high fees from the walled gardens, where you do have good UX, but perhaps kind of extortionate fees. Do you think those fees are justified in the short term, so they can kind of provide the support for providing that UX, or do you think is actually they could lower those fees and still have just as good an experience?
So, as an unapologetic capitalist, I am a believer that if you can charge it only if there's not fair or adequate competition. And actually, at the moment, with good user experience, there's this increase of competition really coming in, and there's massive demand. As either the demand falls or the competition increases, I think those fees will start to erode, but they'll really challenge the operating model of the folks at that user experience end. For Square Cash, Bitcoin has been an absolutely massive driver of revenue for them. For Coinbase, you can see that the consumer fees, I think, were 96% of their revenues. So that may continue for some time,
Mhm.
but actually, yeah, I don't think it's necessarily going to break them in the short term, but inevitably it has to break them in the long term, because either they'll get competed away, or the demand will disappear. So one of those two things would happen.
Okay, cool. In terms of kind of your key frustrations with the perceptions people have with crypto, can you just tell us a couple of those?
It changes depending on the month. So I think the original was "It's All Crime." That has now been well and truly put to bed.
Yeah.
The CIA director has gone on record saying there is less crime happening in crypto than there is in the existing world of financial services. Sorry, the former CIA director. And you can look that up on Google and go check that out. And the interesting thing about crypto is how transparent it is. You can see exactly what's happening, unlike the world of regular financial services. So that's number one. Number two, it's too volatile. Too volatile for what? For who? Volatility is a feature, not a bug. It is draws attention to something, and traders can make money from it. It is not for everybody. So I don't know that volatility is the problem. And I think that comes from the fact that it was called a cryptocurrency, whereas actually most of the way that these assets perform looks a lot more like commodities. They look like gold or oil or something like that. And as we're building a digital economy, if you think back to the Industrial Revolution, we had gold and steel and oil and timber and all of those sorts of things. We're building the equivalents for the digital economy, because what we've done is we've digitized the things that we had in the physical world and brought them into the digital world. The classic is skeuomorphic design. When you think about the UI patterns of really looking at balances on a screen, I'm looking at a statement, and why am I looking at a statement? What's that for? And as you start to unpack why these design patterns exist, you start to really think about, like, does it need to be there? And that's now what's happening with the digital space. So yeah, number one is around the criminality. Number two is the volatility, and then number three for me is the energy efficiency thing.
Okay.
Yes, Bitcoin uses a lot of energy. There's no question. We are in a climate emergency, and I think that should be headline news every single day. That it's horrific what we're doing to this planet. We are the species. We are a frog that is boiling ourselves. This cannot continue. However, we are talking to each other on computers right now that are burning energy. Chances are everything that you can touch around you, I don't know if you've got a laptop in front of you, you've got a table, chairs, mouse, all of that took energy to create, was brought to you from somewhere else in the world, probably wasn't made locally in the UK. And things like cement, you create 4% of our greenhouse gases, versus Bitcoin that's creating a fraction of a percent. So the level of focus it gets relative to the crime it commits, I think, is absolutely ridiculous. Also, when you consider the amount of paper involved in the traditional world of financial services, the inefficient use of data centers, the amount of trucks moving around the world, moving checks, moving paper cash around, the greenhouse gases all of that creates. If you were to move to something like a Bitcoin and arguably continue to make that more energy efficient over time, you would net reduce the carbon created by the financial services sector. So I just don't buy the climate emergency argument against Bitcoin. I absolutely buy that we're in the middle of a climate emergency, and I think we have to separate those two.
Okay, sure. So what we're going to do now is actually take a look at a Coinbase journey where we're sending Bitcoin to another wallet. So we are scanning the QR code. That gives us a address that we can paste somewhere and then copy it. And then very simple design language, we can enter the amount here, see the Bitcoin amount that we have, prompted to send to a friend, and we can paste the address there, or actually put in a mobile or email address should they have an account, an optional note, and then we get a kind of preview message about what we're sending. Two-factor authentication, very quick to come through. And we can then see it successfully sent. And we're back to the home screen there. So we saw there a very seamless journey, actually, taking under a minute to scan the code for the destination wallet, get that through, and then send the Bitcoin across. We were, however, warned of a half an hour wait. Do you think that these waiting times can be improved? And do these inefficiencies threaten the success of cryptocurrencies?
That second question, no. The first question, yes. So can they be improved? Yes. Do they threaten crypto? No. Most people that are buying and selling crypto are used to that by now. And then can they be improved? Yes, there are several projects attempting to do that as we speak. So there is an idea called Layer 2 scaling. For Bitcoin specifically, there is a project called the Lightning Protocol, Lightning Project. And Lightning is essentially, like it sounds, building this ability to move Bitcoin near real time. And so what it does is it takes a bunch of Bitcoin transactions that are happening and then sort of sends messages that all of the different wallets will receive and go, well, Lightning has said it's done. We're happy to say that actually it's moved and tell the user they've moved on. Now, I don't know if you remember in the early days of banking apps, and still with many banking apps, you had this sort of pending transaction thing that was happening. So what was happening behind the scenes there is when you walk into a store and swipe or you buy something online, what's happened is you have authorized your bank to move the money. The money hasn't actually moved. So what banks would do historically is say, you had a pending transaction that you've authorized. You said we can move this money, but we've not moved it yet. And I think it was Monzo or the early challenger banks in the UK that innovated and said, why do we show them pending? And it's just confusing to users. Why don't we just say at least 99.9% of all transactions succeed? We'll just tell them it's succeeded. And if it doesn't, then we'll go in and we'll let them know and we'll send them a push notification. So as a design pattern, that's become fairly standard. I expect that you might start to see something similar emerge from wallets where they have this ability to say, this transaction is going to happen. We're pretty confident in it. So therefore, to you, the user, it's happened. You've got your coins, on you go. So I suspect that's what we'll see.
Yeah, I can see that being a dramatic improvement for the UX, because that was a kind of breaking point. It was such a big moment where you could immediately see your transaction history. As soon as you get a coffee, you get that notification. And at the moment, sometimes sending Bitcoin, there's a bit of unease about where is this in the ether right now, even though.
And 30 minutes till you find out. And you're sort of like, has it gone? Has it worked? My balance has gone down, but that one's not gone up. Like, yeah, it's horrible because it disappears on you. I also think the fee size as well. So like, $5, it costs a cup of coffee to buy a cup of coffee in Bitcoin. But at the same time, you've got to remember that what Bitcoin's doing is in the banking world called settlement. So you are actually, the money is moving, the value is transacting. You've not sent somebody a message saying, I intend to move the money. And technically and legally, those are two completely different things. So as Bitcoin, as crypto starts to add this messaging layer over the top, then you could see that the fees should, in theory, start to come down as well. So, if it costs a cup of coffee to buy a cup of coffee, how much use is this really going to get day to day?
Mm-hmm. Yeah, absolutely. So one of my questions is about how does Coinbase proceed from here, or how would you suggest it proceeds? I suppose that would be one of them. So it would be the kind of quick transactions, at least appearing so for the user. And would you say the other would be lowering those fees to make it more of a feasible payment method?
So I'm pretty sure all of the wallets are very aware of those quicker, the layer 2 scaling solutions, and are actively looking at how to get them to their users. So I wouldn't be so bold as to suggest that they should go do that for the first time. I think they're already looking at it. But from a design pattern standpoint, yes, where you can afford to take the risk, where you are fairly confident that this Bitcoin transaction is going to settle, why would you not implement that design pattern? That just seems very, very logical. It reminds me of something that Chime does. So Chime, with their Get Paid Early or their Paycheck Protection Program stuff that was happening when you saw the US roll out all of the additional funds through the pandemic. The thing that they did is they made sure the funds cleared early. Chime had not received the funds yet. So they made a risk decision that was, the US government has said they intend to pay us. We think they're good for that. So therefore, we will just go ahead and release this money into the accounts 2 or 3 days early. It doesn't make any real difference to us. We can afford it in the accounting. Like those sorts of things that are great experiences, but as just risk decisions, can actually make a massive difference to the user experience.
Absolutely. That would be really exciting to see if Coinbase did go for that approach. How do you think this ranks for a crypto wallet experience?
Yeah, it's pretty good. Coinbase are fairly up there. I absolutely love Cash App. Cash App is just so stripped back, so unbelievably clean. To me, like that's almost brutalist in how clean it is and how far they've gone for the crypto experience. But then it's only Bitcoin. So there's a trade-off to do that. So I would put Coinbase for mass consumer really, really up there. But I think there's a couple of categories starting to emerge. There's mass consumer crypto, which Coinbase is really, really up there on. I would put BlockFi in that category, maybe slightly more kind of more on the intermediate level. I'd put Argent in the conversation as well. And then as you kind of get up towards the trader end, you've got to start talking about the Krakens, the Binances, and indeed the FTXs of the world, who are doing amazing things, but very much on expert mode.
Yeah, absolutely. Do you think we're kind of quite far away from being able to pay with crypto in shops on a kind of mainstream level? You can obviously you can do it in certain ways. BitPay, for example, is now available on Apple Wallet. But how far away do you think we are from that kind of space?
Yeah, 10 plus years. Like especially bricks and mortar retail, it's just not necessary. It's just not needed. But the thing I would say is, BlockFi is launching I think it's a credit card, maybe a debit card with Visa. And what they'll do is that would look and feel like a regular old debit card. But here's the thing. Let's say I'm a trader, I've got some crypto gains. I turned my crypto gains into these US dollar coins, these USDC, this stable coin. I've now got that linked to my credit card, so or debit card in this case. I go use this card and I buy something in store. The merchant gets like proper dollars from an account, but actually what happens in the background is BlockFi sells my stable coins, sends that money to Visa or to one of the banks, and then behind the scenes it happens. So it looks and feels like I've bought that with a stable coin, like I've bought it with crypto. So have I bought it with crypto? I haven't not bought it with crypto, even though like the point of sale device hasn't really changed. So I think actually the consumer cards could be the interesting way, could be the interesting wedge product. I know Coinbase is looking to launch one. I think there's many others that would look to follow. And Visa has been doing really interesting work about making that card that point of acceptance for it. But I actually think that maybe it's the small businesses. You've got the whole trader audience, but then the small businesses who need to move money internationally, and there isn't really a good transfer wise for small businesses because there's a lot more complexity involved in the taxation and blah blah blah. This stablecoin to move money around between my regional offices for small businesses or mid-sized businesses could be an interesting space to look at.
Cool. That's definitely one to keep an eye on. And is there any kind of leading companies in that space at the moment that you pay a kind of particular attention to at the moment?
Not in the business space. I think that's a giant opportunity for somebody. The kind of the other spaces in stable coins. I mean, everybody talks about USDC. Everything that's Circle and indeed Coinbase are working very closely on that. Again, I'd point you at BlockFi as being the ones releasing the card, and just watch Visa. Visa are doing some very interesting things.
Great, will do. Thank you so much, Simon. It's been great talking. It's really interesting to talk more about crypto and as we see more and more of the stuff on Pulse.
Thank you so much.
No worries at all. I'm just going to call out the Pulse pick of the week, which actually happens to be PayPal's Pay with Bitcoin journey. So in a strategic and forward-thinking move by PayPal, users are able to purchase products by selling off Bitcoin and raising the required funds for the transaction. It's a remarkable journey and how quick it can be to the point of purchase, especially given the kind of awkward and sluggish reputation Bitcoin has in this department. So yeah, the dynamically updating exchange rate is great as well. So huge credit to PayPal there for such a great journey. Thanks for watching today's episode. If you want to see more journeys like this, head over to pulse.11fs.com to find out more and to catch our Homescreen episodes. Thanks, everyone.